Okay, it's loading, Vic. Just a minute, I think. Yeah, we are live now. Perfect.
Great.
So let me see. There are 13 people waiting. They should be in any moment. Okay, perfect. I see 15 viewers right now. Maybe we can give a minute or so for people to join in, and then I'll begin.
Sure. Yeah.
Loading, Vic. Just a minute, I think. Yeah. I will also, Vivek, make you the host so that you're able to share your screen. Okay, we can start. So welcome everybody. Thanks so much for joining us on a Friday evening. So I think most of you would know about Gulaq and Estee, and that's why you're here. We have been getting calls, from a lot of you people, a lot of our investors to figure out what's really happening in the markets. We had the market falling in the last week, and people got a little troubled. Although, as you would know, people who have attended our webinars, we always say that you should look at the long term. But there was a lot of apprehension amongst a few of our subscribers. So we thought, why not prepone our AMA session that we do at the end of every month? We decided to do it today. So welcome everybody, and happy to also invite Vivek Sharma, who's the investment head and director at Estee and Gulaq. I think most of you know about him. We have done a lot of sessions, a lot of webinars before. So Vivek, over to you to take everyone through the slides that we have today.
Great. Thanks a lot, Eesha. I'll just quickly share my screen.
Sure.
Yeah, let me know if it is visible.
Yeah, it's visible.
Yeah. So, okay. So I'll just start with this specific quote because I think it's the right time to remind ourselves about this beautiful quote from Warren Buffett. It's wise for investors to be fearful when others are greedy and greedy only when others are fearful. And I think we all know right now, fear is starting to set in. A little bit of fear is starting to set in. So we should get greedy. I think stocks are now, Diwali sale is going on. Stocks are available at much cheaper prices. So yeah, let's start with some of the common questions that we are getting in last few days. One is, are the markets overvalued? Right? So the way I think I'll just quickly take everyone through how Gulaq portfolios are designed and what's our, as a firm, what is our investment philosophy. We never like to take cash calls. We don't like to sit on cash. We like to stay invested 100% of the time. And that's why market valuations actually, the way we treat market valuations, market risk, market volatility is not by sitting in cash, but by maybe moving to safer sectors, safer stocks. That is how we have developed our investment philosophy. That's how our algorithms are designed. That's how our portfolios are constructed. And even in the past, not only past 3 years, we have been live for more than 3 years now. But in our back testing also, what we have seen is this is a fairly good way of avoiding risk, right? Or reducing, not avoiding risk, but reducing risk, right? So you have to take risk if you want to earn better than market returns. You definitely need to be in the markets and you have to take risk, right? But those risks should only be taken at specific points of time, and you need to keep on adjusting your risk, the risk in the portfolio. And the way we do it is through factors. So a market regime is determined every month. At the start of month, when we are rebalancing, a market regime is determined. We figure out what is the regime we are in and what is likely to work in this specific scenario. And it has everything from global macro factors to local macro factors. So it's not only India, it's globally we are looking at markets, because obviously all of these things are interconnected. And that's how we determine what's the regime we are in and whether we need to reduce risk or not. So again, to say markets are overvalued, yes, there are few pockets, especially in small cap and mid caps, which might be overvalued, but then there are ample opportunities also, right? So I don't think as a whole market is overvalued, right? There are definitely very good opportunities out there. And that's what we are trying to figure out using our algos, where is the maximum opportunity, and we want to be present there, right? So it's definitely not a cause of concern right now with market valuations, be it in large cap or even smaller mid caps as well. Okay, I'll move on to the second question. Markets are correcting globally. Shall I book my profits right now or enter when there is stability? Uh, I think we have seen this time and again. Last 3 years, again, just talking about 3 years, we launched our portfolios in May 2020. Uh, at that time, also markets were just recovering from the scare. Everything was not clear at that time, right? And the people who invested at that time, there was a lot of scare even at that time. And the people who invested at that time, it was definitely by no means a stable scenario. But people who invested have gotten very good returns in last 3 years. Again, looking at last 3 years in between, uh, there were few scenarios. I think one was Russia-Ukraine war, where everyone was actually concerned. Markets have also fallen around that time, and people were actually trying to get out. And many people got out also of equity markets at that time. There was another event of not one event, but multiple events of US banks going bust, right? And there was a lot of concerns around that time, what is going to happen. So I think there is no time where markets are always clear and stable. If there is such a time, I think the valuations will be very, very high, really. So it's only because of instability. We keep on seeing these instabilities. We keep on getting these opportunities. And we have seen in last 3 years, people who have stayed invested in spite of all of these scares have actually done pretty well, right? And even now, frankly, I do not have a view whether markets would correct more or not. But what I know is this is definitely not the time to sit outside, right? This is the time to stay invested in the markets. And that is what we are recommended. That is what we are advising, that stay invested. Markets can definitely correct. You don't know, but they can also go high, much more higher from here. Obviously, if your view is definitely short term, if you want that money, what you have invested in the markets in the near term, then it's a risk for you. But if you're a long-term investor, if you have put in money thinking about at least 3 to 5 years time frame, I really do not think there's any risk in the market uh, from that time frame perspective. Okay. I'll move on to the other question. Somebody also asked me that they started investments in Gulaq just in last 1 month and their portfolio is in a loss. What they do? Again, um, should they just maybe stop their SIPs right now or even exit from equity markets? I think the answer is same, but I just want to share some more data. Last 1 month also markets, the multi-cap has corrected by about 4.5%, whereas our portfolio is down by less than 1.5%. So there is definitely 3% alpha, the difference that we have created in our investors' portfolio, right? And that's our job. Our job is to create alpha, right? We really cannot avoid risk. If the markets are going to go down by 10%, Gulaq portfolios would also be down, right? And if we are down just by 5%, I think we have done a good job. And to think about it, today only I was reading this specific statistic in which in Nifty, markets stay from the peak 10% drawdown. If you see, markets stay about 48% of the times in that zone where it is 10% or below from the peak, right? So almost half of the time you would be in the market where peak is about 10% away, or the correction of you would have seen correction of more than 10%. So this correction is really, I really wouldn't call it a correction also till now, whatever has happened, right? So even last 1 month, Gulaq portfolios have done well. If you look at last 1 year performance, obviously made more than 55%, whereas equity markets have done about 15%. So we have generated good alpha The point is to in times like this to think longer term, right? The more longer term you are able to think, that's an undue advantage you would have gotten actually. If you're just thinking about short term, that's really you are at a very big disadvantage. Another question is, I'm concerned about the volatility in Gulaq Gear 6 portfolio. So here again, I'd like to take everyone through the drawdowns that we have seen in Gulaq compared to the drawdowns we have seen in index. So we all know about the returns. We have given a very good outperformance every year in last 3 years in Gulaq. But let's have a look at the risk. And one of the key metric where I gave a very good importance to is the drawdowns. And if you look at this, the blue line is the drawdown of Gulaq Gear 6, whereas orange is the drawdown of Nifty Multicap, right? So if you look at it, there's uh, not any meaningful difference between these two drawdowns, right? The maximum drawdown in Nifty Multicap has been about 18% or so. And in Gulaq Gear 6, it has been about 20%. That's the maximum drawdown we have seen. But apart from that, if you see the drawdown, Gulaq more or less matches. At times it's slightly higher, at times it's lower, but it's not meaningfully different from the drawdown that we see in index. So the point I'm trying to make is Gulaq portfolios are not, in terms of volatility, they're similar to index. In terms of drawdowns, they're similar to index. In terms of returns, obviously, they are far superior. So if you are sitting in a Gulaq portfolio, the risk is the market risk, which is the risk you would take in investing in index fund or any other mutual fund. That's the kind of risk you are having. Yeah, that's our take on the volatility that people are seeing on a day-to-day basis. Ideally, I never like to see day-to-day performance, frankly, of my own portfolio. I just have a look at it on a monthly basis. And these drawdowns look easier to digest
Um, Vivek,
actually.
you're breaking up a little. Hello? Yeah, Vivek, you're there?
We all know we have done well in rising markets. There was a call actually. Yeah. Eesha, is this okay? Let me switch off my video to see if it becomes better.
Okay, sure.
Yeah. Is this better, Eesha?
Yeah, this is better. Can hear you.
Okay. So what I'm saying is we have seen even in flat markets, actually in rising markets, obviously Gulaq has done well, but even in flat markets, there was a 1.5 year period from October 21 till about March of 23, where markets were pretty much flat. And even in these flat markets, we were able to produce good, decent returns. So the point is, we have seen whatever time frame we have seen in last 3 years in rising, falling, flat markets, Gulaq has been able to perform pretty well in all market scenarios, right? Few more data points I would like to take everyone through. One is the rolling 1 month outperformance. So are we saying that Gulaq is going to outperform the market in next 1 month? No, we are not saying that. We don't know whether Gulaq will outperform the market. What the data shows is roughly about 66% of the time, Gulaq outperforms the market or the index on a monthly basis. So out of 10 months, roughly 6 to 7 months, we'll outperform. There'll be 3 to 4 months where we'll underperform. But if you take a look at slightly longer term view, let's take a 6 month view, right? Guys, just sorry. Yeah. If you take a 6 month view, then see what happens. Over 6 months, the certainty or the success rate of Gulaq Gear 6 increases to 98%. Right? So that's the kind of success rate we have seen last 3 years. And that's what I would urge everyone to take a slightly longer term view, be patient, and even 6 months is not really a very long term, but at least in 6 months, we are fairly certain that Gulaq is going to do much better than the index, right? Lastly, I'd like to point everyone to this specific data. This was a study done by JP Morgan, and where we have seen that an average investor has done just about 3.6%, whereas S&P has done 9.5%, or even a 60-40 portfolio has done about 7.4%. And why is the reason? The reason is because I think majorly because of the timing of the market. We are always concerned about the markets. We like to take our own view of the market. If we just stay invested, markets are going to reward us with very, very good returns, right? So, I'll urge everyone to be patient. These are the times where one should stay invested. I think few of the things that everyone should be aware of in times like this is one is just to determine what's your optimum asset allocation is, and follow that specific asset allocation. So if you have taken much more higher risk, if you are into equities much more than you should be, then definitely reduce that risk. If you are concentrated into, let's say, only small caps or only mid caps, you definitely need to reduce those concentration risks. So make a plan, make a disciplined plan, and follow it. I think there's definitely no need to worry about anything that is currently happening with the markets.
Right. Thanks, Vivek, for the inputs. We can move to the last slide at the end, maybe. First, we can
Okay,
cover
sure.
a few questions. We have got quite a few questions from our viewers today. Okay, let me start from the very beginning. I think some of them you've already addressed, but I'd still just bring them up. So Amit Patel is asking, should we book profit now and wait for lower levels, or stay invested in Gulaq 6? So Amit, like Vivek mentioned, it is very difficult for us to predict the market. A funny thing is, so many of our subscribers were worried that, hey, the market is falling, Gulaq portfolio is falling as well. But then today, what happened? The market went up by around 1%. So it's very difficult in the short term. The volatility would be extremely high. So it's really very difficult for you or us to predict how the market would be. If you are a long-term investor, like Vivek said, you should stay invested. You should not book profits, because booking profits would mean you are trying to time the markets, which does not serve well to people. So if you're a long-term investor, do stay invested. Book profits only when you need to, or when you feel that you want to move your allocation, or you found a new product that you would want to allocate some of your money to. Otherwise, I don't think there is any need. Vivek, I believe I've covered what you.
Perfect.
Okay. Now the next question is from Chandrasekhar De. Okay, it's a general question. Please tell us how to use SIP and lump sum for investing in Gulaq Gear 6. So Chandrasekhar, there is, of course, you can go to st.smallcase.com and you will be able to subscribe to Gulaq 6. If you have already subscribed and if you want to invest more, you can there will be an option to either invest more as a lump sum or as an SIP. In case you're unable to figure out how to go about it, we have our customer care email ID and contact number that I will share towards the end of the session in the chat box. So you can reach out to a customer care executive and they'll take you through the process if you're facing any issues over there. I believe your question was more of an operational nature. Okay, now coming to Bharat, he's asking, I'm a subscriber of Gear 6 since 1.5 months and invested 1.5 lakhs. Should I invest more speedily as I have free funds?
Yeah, see, we never advise anyone to keep waiting for corrections in order to invest. And frankly, I've seen more than enough people who have just been waiting for last 1-2 years for a meaningful correction to enter. I'm not sure whether this time it's going to be meaningful correction or not. But one thing that I've seen more often is that people actually stay outside the market, just stay waiting for it, and markets keep going up. So that I've seen much more frequently than anything else. Right. So I think Bharat, it's Bharat's question, right?
Yeah, Bharat's question.
So Bharat, what I would advise is, see, if you're investing for longer term, if you're investing for few years, then definitely if you save 100, 200 points by investing at a much better price, it's not going to be meaningfully different. What is important is you create a plan to invest in markets. If this is a substantial amount of capital, I would advise you to break it down into maybe 3 or 6 tranches and then use SIP to invest. And I'm not saying invest only in Gulaq. So maybe have maybe 2, 3, 4 funds and divide it your capital into 3 parts and then invest in those maybe 3 funds. That's how I would advise you to enter the markets. If your investments are actually for few years, if it's actually some funds that you might need in short term, then definitely equity is not the place you should be investing in. It should be much more in debt that you should invest.
Right. And just to add to this, Bharat, if you're saying you want to invest more in Gulaq Gear 6, since we are at 27th October, it's a Friday, we have only 2 working days before our 2 trading days before, our next rebalance comes in. So it might be helpful if you might be beneficial to you if you wait for those 2 days, because anyway, at the time of rebalance, your stocks will get churned. So if you are so close to the rebalance date, I think we would suggest you should invest more only on the day of rebalance. Vivek, your inputs on that?
Yeah, I would agree with you. And if you're having any operational difficulty in how exactly to either rebalance or set up SIP, please do feel free to call us. Our number is there on our website, and maybe we'll share it here as well.
Yeah.
So do feel free to give us a call.
Right. Okay. So we have another Bharat. This is Bharat Gohil. He's asking, he's recently, so yesterday and today invested in Gear 6. His question is, how much is it risky to add a public company portfolio as they already run up? Oh, as they've already run up.
Sorry, can you repeat the question, Eesha?
Sure. So this person, Bharat Gohil, is asking, how much is it risky to add a public company portfolio as they already run up? I think he's
I
saying,
think he's talking about the overvaluation of stocks, right? And that is what we do in monthly rebalance. We figure out the market regime, and also we figure out which are the stocks which are likely to give us the best returns in the short run, right? So that is what we are doing in the rebalance. What I urge everyone is to rebalance on time, and the rebalancing actually takes care of this, really. So if there are certain companies which have really run up, and if we feel that there are definitely better opportunities available than these ones, then we are likely to rebalance. Uh, but it might so happen that we actually feel that depending on the sector that specific company is, depending on the price, depending on the valuations, that specific company, even though it has run up, it still has much more way ahead to run up, and we might not exit from that specific stock. So I think valuation is just looking at it in isolation really does not tell us too much. Valuation might be high, but if you look at it along with growth, it might be that the company is growing very well. And if you look at it in that sector is growing very well. So those companies are always going to be very expensive, but the returns also should be pretty good from those kind of companies, right? So if you just talk about returns or the company's P ratio, we are just not looking at it in a 360-degree view.
right.
That's not a complete view we are taking.
Makes sense. Mayank is asking, is there a risk of conflict with SEBI's April order, wherein it has put restrictions on model portfolios and highlighting returns based on past performances? So
Yeah, see, in our ads, we do advertise, but in our ads, we never talk about our returns. Even in these AMAs, it is for a very close group and people who are asking questions. We are just trying to answer those questions. We are always using our disclaimers. It's always risky. There's definitely market risk involved. From our side, we never try to to mis-sell these products, right? So from our side, we are taking all due care. Now, talking specifically about model portfolios for research analysts, there is definitely a gray area whether they can actually sell these model portfolios or not, but we are SEBI registered investment advisor. So for a registered investment advisor, I think the rules are very clear. We can definitely advise or sell these model portfolios to our clients.
Right. Thanks, Vivek. And Mayank, we'll also share our disclaimers in the caption at the end of the video, so you can go through them. Okay, so another question is, okay, some SKR is telling us he invested in Gulaq Gear 6. Great, thanks for being our subscriber. Hope you are able to benefit. Ashish Bagri is saying, why don't you balance the portfolio before the planned date when the market is clearly bearish, either correcting or pulling back? So, Vivek, your views.
So I think I showed the data.
Yeah.
First of all, this is all our portfolios are based on very systematic approach. It is not our feeling that if now markets are in bear market and I should correct. That is not the way we operate, right? We have a very clear rule-based systematic approach towards investment, right? And what we have seen based on our historical back tests and even in live results, we have seen this kind of market where everyone starts to panic, and I don't know, it's less than maybe about 5% drawdown. It's clearly not a bear market. The data that I want to share with everyone is market stays in this bear, if you call it a bear market, in more than 5% of the correction phase, it stays about, I think, 65 or 70% of the time. And more than 10% correction phase, it stays about 50% of the time. So 50% of the time, market is actually trading more than 10% away from the market highs, right? So this is a very normal thing in markets. It's not at all unusual. Every year we see 5 to 10% drawdown. Every 2 to 3 years we see about 15 to 20% drawdowns, right? So these are very normal thing to happen in market. It's not an extraordinary market, and that's why there is no reason for us to deviate from our planned rebalances on the first of every month.
Right. Just to add to it, I think, Ashish, like we discussed at the beginning of the webinar, right, that till yesterday market was falling, today it went up. So had we taken some action, firstly, it would have meant we are trying to time the market. We are trying to deviate from our regular rule-based investing style. We would have timed the market, and then that basis what everyone was telling us, all our investors, what a lot of our investors were telling us. But today the market went up. So the same, our portfolio also went up a little more than the market. We would have lost on this opportunity. So taking action on these short-term market movements might not serve us well, because this is just short-term volatility, like Vivek has also shown us the chart about. Okay, someone is asking, how much of one's portfolio do you advise can be in Gulaq Gear 6? Any specific maximum amount to stop for Gulaq 6?
Yeah, I think what he has told is, depending on your risk profile, it should be somewhere between 20 to 30%. And this is not only for Gulaq, for any fund. I think one should definitely not go above 20%, about 30%. So yeah, about 20 to 30% in that range, one can, depending on your conviction on Gulaq, you can take anywhere between 20 to 30%, but I wouldn't advise anyone on more than that. And not only Gulaq, as I said, any mutual fund, any other fund also, because of the concentration risk, you should not go above 30%.
Okay, Ashish is asking, isn't there a provision where your strategy can allow you to have some cash holding instead of being fully invested every time?
Yeah. See, that's what I was telling in the first part of this webinar. There are multiple ways of reducing risk. One is to move to cash, but that is just half part of the story. The other half is when do you invest back, right? So in order to come out ahead, you have to have both these decisions correct. That okay, I have exited now, a part I have exited, but I do need to re-enter also, right? And what we have seen is uh, not only with us, but most of the market participants, it's not a trivial thing to do. It's a very, very hard thing to do, right? And what we have realized in our experience, in our skill set, the easier way to reduce, the better way to reduce risk in our view is move on to safer stocks, move on to safer companies. That's the route that we are taking. We don't like to move in cash, but yeah, if there is risk in the market, we would like to move to safer stocks. We'd like to move to safer companies. That's how we try to reduce the risk in our portfolio.
And I think someone also was asking Kamal Kishore that should we increase more weight towards large caps? So I think
Again, see, this is a maybe a good question, but it's hard for any retail uh, investor to answer. And again, the way we have approached this problem is uh, in a very, very systematic way. So we analyze hundreds of factors and then we let our algos decide whether this is a good time to increase allocation to large caps, right? And again, that is what we are doing. That is what we have made the rules for. That if large cap, if small cap, if there is risk in the market, if the market regime is not very certain, and if their mid cap and small caps have become really expensive, there are not enough good stocks there, then we'll actually you'll see it in our portfolios. It will automatically move to large cap. And this we have seen in the past also. The returns that I was showing, the flattish period that I was showing, actually we moved to safer factors, safer sectors during that time, and we were able to generate those returns even in those flat markets, right? So this actually happens very, very systematically, right? And that is, I think that's a wise thing to do, but you don't know whether actually right now is the time to move to large caps or not. So there has to be a systematic approach to your decision making. That's what I'm trying to get to. That is what we are doing in Gulaq. There's a very systematic approach towards all of these questions. These are, I think, a very relevant question, but how to do it is the key, right?
Yeah.
And that's the systematic approach which gives us an edge.
right. So Karan, in fact, is asking about our strategy only. He wants to know more about our strategy and if it invests in one specific factor based on the market conditions, or all the factors are combined and based on that we select.
Yeah, it's not one factor, it is multiple factors. So there are more than 130 factors, and this is a combination of uh, technical factors, fundamental factors, and certain unique factors like management buying and selling, whether the company's management is buying or institutions are buying that stock, or even FNO data, or data like whether a specific stock is likely to be included in a specific index or excluded from that index, right? So it's a mix of all of these factors that we combine and take decision, but we are not using all of these factors. Depending on the market, we try to select which are the factors that are likely to work in this market, and then we select those factors. So that's how, in brief, this methodology is. A combination of fundamentals also and technicals, and we never rely on one factor because it becomes very risky, right? So it's a combination of multiple factors which makes our portfolios more robust.
Right. So just someone is asking, Mohit Gupta is asking, with due respect to your rebalancing strategy on monthly basis, please see if you can do bi-weekly rebalance, which can further reduce the risks. So Vivek, if you want to talk about the data, I think we did some analysis to show which is
Yeah,
the
we have definitely done this analysis, and what we have seen is the alpha or the returns outperformance from as compared to the index, that will definitely increase in bi-weekly, but it will also increase in weekly. It will much more increase by more amount in weekly. But what happens is your transaction cost in terms of the brokerages, the taxes, STT and all that you pay, and also the slippage that you will bear. If you take everything into account, net monthly will come out to be better than weekly or bi-weekly. Okay, so monthly is kind of a sweet spot, which is rebel in terms of optimizing both for higher returns and lower transaction cost, right? So we have done this, we have studied this, done this analysis many times, and monthly is what is a better approach actually.
Perfect. So someone's asking, any particular date do you advise for adding SIP? Does adding money in Gulaq 6 any day, is that okay?
Yeah, it's okay. Again, this is totally random. We have seen in Gulaq, we have seen in other index funds. No day is good enough. Good enough means no day, there's no meaningful difference actually. So it could be any day. Better is systematic, be it systematic. Because we rebalance on 1st of every month, I would advise that last maybe 2, 3, 4 days avoid, because rebalance anyways is in within a week's time, right? So maybe you can just avoid last few days, but otherwise any day is good enough for you to add. There's no clear difference actually there.
Right. So Shiv says he's a newly invested subscriber of ours, and his portfolio is down by some percentage points. I think Vivek, you also showed the
Yeah.
comment regarding that. So he has
Yeah.
a follow-up question that he has some more money to invest.
Yeah.
Can we give some tips when to enter, as now a day bond yield and geopolitical tension is going on? So please guide the timing for best entry with a decent amount.
See, the way I think about it is, more the tension in the market, the better timing it is.
Oh, that's interesting. Why would you
So,
say that?
right. But I really don't know whether the tension is going to increase or not, or the markets are going to correct or not. So again, I'll keep repeating that same thing. If you're a long-term investor and if you're investing monthly, that is a very good approach. That's a very good approach of going about your investing strategy.
So if Shiv has some more money, maybe he should, as regards to Gulaq portfolio, any day, like you mentioned, investing is fine. But given that we are very close to the next month's rebalance, maybe he can wait for the rebalance and invest more on that day.
Yeah, along with rebalancing, yeah.
Along with rebalancing, of course, yeah. Perfect. Okay. Chandrasekhar Dey is asking, what is the return of Gear 6 during 2018-19 when small cap was in range?
So we have published a blog on Gulaq.com. I don't really exactly know right now the returns, but you can go and check out that specific blog on Gulaq.com. It was about our backtesting process also, and we've shared the backtesting returns also, right? So it'll be good for you to go and check out our returns, our backtesting returns at that point of time.
Right. And if Chandrasekhar, you're wanting to figure out how the portfolio performed when the market was in a range. So I think that slide Vivek did show when the markets were flattish, I think the entire year 2021, how much Gulaq outperformed the market. So Vivek, would you want to share that chart again, just for everyone to have a look?
Yeah, sure. Yeah. One second.
Yeah, sure.
Yeah, this is the one you're talking about, Eesha?
Yeah.
It was in the flat market, yeah.
Yeah, this was the one.
So I think that this 1.5 year period markets were flat, and we were able to give about 35% return in this flattish period. So again, during this time, we were heavily allocated towards large caps, and mid and small cap had lesser allocation. And last 3-4 months, when the markets have started actually this up move, we actually shifted our allocation more towards small and mid caps. Yeah.
Yeah. And just for people who are new, everything is, rule based. We follow a systematic rule based investing strategy. So it's not that somebody is sitting and deciding that, oh, the markets are falling or they are flattish, so we should move our allocation towards large caps. We have IITians and engineers and MBAs who are working on the code on how to improve the code, but it is the code that looks at thousands of data points, lakhs of data points actually, and comes up with the rebalance for each month when we run the algo. That's the process we follow. Moving to Aruna. Hello, sir. I'm a subscriber of Gear 6. I want to do SIP every month. Can I do it less than the investment value in small case? Sure. So you don't have to follow the minimum investment amount for a portfolio in case of SIPs. Because minimum investment amount, if you're talking about Gear 6, is 24,000, but SIP can be done for 1/4 of that amount as well. So the actual exact amount of SIP would be visible to you only when you go and you want to do the SIP, but it is only 1/4 of 24,000. So within 5 to 6,000, you will be able to do an SIP every month. And again, if you face any issues over there, please feel free to contact our numbers that's on our website. We'll also be sharing the numbers right now after the webinar ends. Okay, Amit is saying in Gear 6, is there allocation throughout all sectors, large, mid, and small cap? Yeah, it's a multi-cap portfolio. So we have allocation towards all the sectors, which could change every month in the rebalance. And stay tuned for our rebalance video. Whenever we do our next rebalance video, we'll share with you the allocation across sectors throughout the year, throughout the months. Okay, Sonu. I have lump sum amount to invest, new to Gear 6. Whether can I invest now the entire money, or I think we've answered the question, Sonu, a few times. So you can rewind the webinar and just look at it. But just to summarize, we suggest you do it in a systematic way. If you have lump sum, you can invest, but do not invest right 2-3 days before the rebalance. So wait till the rebalance. After that, whether it's lump sum or it's SIP, does not make much of a difference. Based on your comfort levels, you can either do a lump sum or you can divide your amount into multiple tranches and do SIP. Even a weekly SIP you could do. But do not wait for markets to correct, because nobody really knows when they would. Okay, Subhash, लाइव चैट हिंदी में रिप्लाई देंगे तो ज्यादा बेटर होगा. श्योर, हम ऐसा कर सकते हैं सुभाष. इनफैक्ट हम ये भी सोच रहे हैं कि जो हमारा नेक्स्ट रीबैलेंस वेबिनार है वो हम हिंदी में करने वाले हैं. तो आई थिंक अभी 2 हफ्ते बाद एक वेबिनार होने वाला है जो हम हिंदी में करेंगे. तो आई एम होपिंग कि उससे बहुत लोगों को फायदा होगा. Vivek, rest of the webinar should we do in Hindi? We can do that.
Yeah, I'm fine. Let's do in English. We'll use both.
Yeah, we'll do in
Hindi.
English. We'll try to cover both languages. दोनों languages cover करते हैं. Swayam is asking, any limit on number of subscribers? तो Vivek.
Okay. So Swayam, there is definitely limit. But वो अभी हम काफी दूर हैं उससे. अभी हम काफी छोटे हैं in terms of number of subscribers. Frankly, और जब भी हमें लगेगा कि हम उस लिमिट के पास पहुंच रहे हैं तो हम एक दूसरा वी हैव सम वे आउट ऑफ इट. तो क्योंकि अभी हम सिर्फ फर्स्ट को रीबैलेंस करते हैं, राइट. तो अगर हमें लगेगा कि हम लिमिट पे पहुंच गए हैं तो वील स्टॉप दिस सब्सक्रिप्शन टू दिस पोर्टफोलियो एंड वील स्टार्ट अनदर, लेट्स से पार्ट बी, जिसको हम एक वीक बाद रीबैलेंस कर रहे होंगे और उसको हम हमेशा हर मंथ 7th को ही रीबैलेंस करेंगे. सो देयर आर अदर वेज टू गो अबाउट दैट लिमिट. लेकिन अभी हम उस लिमिट के क्लोज भी नहीं है. हम काफी ध्यान रखते हैं कि जो भी स्टॉक्स हम सजेस्ट कर रहे हैं उनमें कितनी लिक्विडिटी है, कितने इन्वेस्टर्स हैं अभी. ऑल ऑफ दीज थिंग्स वी डू कीप एन आई ऑन एंड वी आर नोवेयर क्लोज टू दैट रीचिंग दैट लिमिट राइट नाउ.
Perfect. SIP or lump sum, which one should I use? I'm thinking invest lump sum. Okay. Chandrasekhar, we've highlighted this before, so we've answered this 2-3 times in this webinar. Next question पे चलते हैं. Dear sir, I also have 3 lakh cash but not invested because it is used for margin money during rebalance time, which I used in pre-market order instead of normal market. Is my strategy okay?
मेरे को ईशा पूरा समझ नहीं आया ये क्वेश्चन, बट फ्रॉम व्हाट आई अंडरस्टैंड, बिकॉज हमारे जो रीबैलेंसिंग या जो रूल्स हैं मार्जिनिंग के अराउंड, दिस इज डन बाय सेबी. इफ आई सेल अ स्टॉक वर्थ 100 रुपीज, अगर मैं 100 रुपए के शेयर्स बेचता हूँ तो मेरे को वो पूरे के पूरे 100 रुपए अवेलेबल नहीं होते बाय करने के लिए. मेरे पास अवेलेबल होते हैं सिर्फ 80. तो 20 मेरे को एडिशनल रखने पड़ते हैं। अगर मेरे को अभी के अभी रीबैलेंस करना है तो मेरे को 20 रुपीज अभी रखने पड़ेंगे एक्स्ट्रा अकाउंट में, या फिर मैं उसको अगले दिन के लिए रीबैलेंस पे लेके जाऊंगा। वो 20% जो मेरे को बाय करना है वो अगले दिन एग्जीक्यूट होगा। तो ये दो अभी मेथड्स हैं अवेलेबल। व्हाट सेबी इज डूइंग इज सेम डे सेटलमेंट, जिस सेम नॉट डे बट विद इन अ फ्यू मिनट्स। तो हमें एटलीस्ट कुछ टाइम बाद अगले दिन नहीं जाना पड़ेगा, या ये 20% नहीं रखना पड़ेगा एक्स्ट्रा कैश। बट अभी के लिए द वे थिंग्स आर स्ट्रक्चर्ड, the rules around these margining, we do need to keep that 20% of the rebalance amount extra, or take our rebalance to the second day.
Yeah.
Yeah, I think that's what he is talking about.
Yeah,
if I
I
understood
think
correctly.
I think so. I also think the same. And also आप ऐसा मत कीजिए कि आप अपना अमाउंट जो है वो होल्ड मत कीजिए। मतलब इफ यू हैव 3 lakhs एक्स्ट्रा कैश विच यू थिंक इज इक्वल टू द 20%, तो आप उसको वेट, आप ये भी कर सकते हैं कि यू इन्वेस्ट, यू रीबैलेंस ऑन द फर्स्ट डे। सारा पैसा लगाइए जितना आपके पास है, जितना आपको लगाना है गुल्लक पोर्टफोलियो में, एंड नेक्स्ट डे आप रीबैलेंस कर सकते हैं। तो ऐसा मत कीजिए कि आप इन्वेस्ट ही नहीं कर रहे वो 3 लाख रुपीज, क्योंकि यू थिंक कि उतना तो रीबैलेंस के लिए चाहिए होगा ऑन द फर्स्ट डे। यू विल हैव अ शॉर्टफॉल ऑफ 20%, जिसको कवर करने के लिए यू शुड नॉट कीप दोस 3 लाख रुपीज। वन डे वोंट मेक दैट बिग अ डिफरेंस इन द लॉन्ग टर्म। एंड इफ आई थिंक, आई होप वी अंडरस्टूड योर क्वेश्चन करेक्टली। अगर आपको लगता है हमने अंडरस्टैंड नहीं करा ठीक से, तो प्लीज आप फिर से शेयर कीजिए क्वेश्चन। Suraj is asking, can we get 1 year plan in gear 6? Suraj, unfortunately, no. इसका रीजन यही है कि we are a SEBI registered investment advisor, and as per SEBI, investment advisors कर ही नहीं सकते 6 months से ज्यादा चार्ज अपने क्लाइंट्स से in advance. So we will have to wait for, you will have to make payments only up to 6 months. Beyond that, we are not allowed to charge from anyone. But I just want to understand, we get this question, what could be the reason
Yeah.
why people are looking for a year-long plan and not a 6-month plan? I would want to know actually, Suraj, if
Maybe a better deal, right? So our 6 month is definitely a better deal than 3 month.
Yeah.
And if I'm convinced about a product, I would like to get a much better deal, even if it means paying for the long term, right?
Yeah.
So
Yeah.
maybe
Quite
it's
well.
that, maybe it's something else.
Yeah. Maybe it's
Yeah, but
something.
this is something that we definitely would raise with SEBI. Uh, but as of now, it's not possible.
I think they are just trying to protect the interests of the investors, and we have to abide by their rules. But Suraj, do share your reason. No, what is your reason of wanting a 1 year
Yeah.
plan? That would help us understand the concern better. Then Kamal Kishore, can we have portfolio check twice a month? We have already answered that, Kamal. Swayam Chopra, is Gulaq planning to come up with more frequently balanced small cases? More actively balanced. Okay, this is a new one. We have got comments from people where they say कि उनको 6 monthly rebalance करना है, but more frequent rebalance portfolio. Vivek, any inputs there?
Sorry, I didn't get this, Isha. Is he asking more frequent means twice in a month, or what exactly he's asking? I didn't understand.
Yeah, I think his question is if we are planning to launch a small case which will be rebalanced even more frequently than 1 month.
No, we definitely don't have any plans. As I've already told, the transaction costs, slippages, all of that would add up to quite substantial leakage in the returns.
Right. Okay, another question by Nitish Mishra. One confusion on Gulaq 6. It always seems like we might miss some rally while putting some one-time amount during mid or end of the month. And then his other question is, as it has rebalanced at start of the month, is it good to use dip and invest in fall? I think this is about timing the markets, right, Vivek? So
yeah. See, if you have cash and if the markets have corrected, obviously it's good. But don't wait. That's what I'm saying. Don't wait for any market correction. Don't keep sitting outside waiting for a market correction and only then you will enter. That is really not a very good strategy to implement.
Right. Okay, Sandeep has a question, which is, I think, an interesting question, Vivek. He's saying he's saying, is it possible that foundation of maintenance of range of minimum investment in year 6 prevents the algo to choose good companies having high share price? So,
In fact, it's the opposite,
yeah.
actually. Yeah, it's the opposite. So, what we have seen in our research is the companies having their share prices, lower share prices, have some, if all things being equal, they definitely do outperform the companies having higher share prices. So yeah, there is a limit because we wanted to keep, we wanted to offer it to retail people and want to keep minimum investment size lower. So there is definitely, we can't have companies whose stock prices are 5,000, 10,000 or higher. That's a limit. But I don't think we are at a disadvantage because of that limit.
Right. Makes sense. Okay, SK is saying thanks for building our confidence in current market situation. Thank you, SK. In current market situation, which factor are we following? Is it momentum, value, or growth?
So as of now, see, there are always multiple factors, and these factors also have different weightages, right? So there is definitely a big component. Momentum, I think, is the momentum, yes, is the biggest component. There are quality, value, growth, other factors also. But I can tell you, momentum is the biggest factor. And uh, when we rebalance next month, we'll in fact, we'll remember to share what exactly are the factors that are there in the next month's portfolio, right? But in current month's portfolio, momentum is, I would say, the biggest, and that has been the case for last few months. We have seen a good rally, and usually during this time, momentum stocks do well. So momentum has been the biggest contributor in last few months. Yeah, but we will definitely note it down and share the factors also that are in our portfolio currently, right?
Definitely, yeah. Like, it'll be interesting to see what the algo says based on the
Yeah,
current.
yeah.
Sure. SK only is asking that maximum stocks are 20, but currently it's 14. Any specific reason, or we can't see other stocks in our model portfolio? No, I think SK, the maximum stocks is just an indication of the total number of stocks you could have in your portfolio. But if you are a subscriber, you will see all the stocks
Oh,
that we have put in that particular month.
yeah. I think the average has been about 13, 14 always.
Yeah, 13, 14 is usually what we also see. It's gone down to 10 also, but the average, like Vivek said, has been 13, 14. If you are a subscriber, be rest assured, on small case, all the stocks that you see will be the ones that are there. There are no more.
Yeah, yeah.
20 is just an indicative number. Okay, I lost the track. Yeah. Thank you for having this session. Is there any chance change in your strategy or the factors you check because of recent correction in the market? Divakar.
Yeah, that is going to happen. See, that's the approach we are talking about, that if this correction is meaningful, what is going to happen is uh, the weightages to these specific factors that we are talking about is going to change, right? So in a rising market, mostly growth and momentum gets much more weightage. And in flattish market, it's usually value, quality, low wall. Those are the kind of factors that get more weightages, right? So we'll see, and we'll share that specific data point also in our rebalance update after it has happened on first. We'll be happy to share that data. So let's see. I'm expecting some change, but I really don't know what will be the extent of change in those specific factors. So we'll do definitely keep you in loop, everyone in loop.
Definitely. Okay, a user is asking, it is observed that during rebalancing every month, my taxable income increases. Hence,
Yeah,
the actual income decreases.
yeah,
So request is to take care of this while calculating the returns of the portfolio.
yeah, yeah. We do are aware of this specific thing.
Hmm.
Um, and the reason we are continuing with this is obviously because of the expected alpha. So the expected alpha or the expected outperformance or the increased returns more than compensates for the higher taxes that we are paying. So we all our team, everyone in Gulaq team has personally also invested, and we are aware uh, of these factors. And to the extent possible, we do keep researching on making these portfolios better always. So not only by improving alpha, but our major focus is also on reducing the churn, right? So all of these factors are in our mind when we are trying to improve our portfolios by constantly researching newer, better ways of constructing our portfolios. But as of now, this is the best we have, and I think the excess returns are more than able to compensate for these extra cost, be it the transaction cost or slightly higher taxes. Yeah, but this is an area which is top of our priority list. How do we make it more efficient? So we are definitely thinking of ways of making these portfolios better. Hopefully, in the next few months, you would hear more from us on this.
Right. Kartikeya is asking, what advice would you give to a retail investor regarding ideal number of stocks in a portfolio? Also, please shed some light on trade-off between percentage allocation of each stock and number of stocks in a portfolio. That's more of a portfolio management question, Vivek.
Yeah, see, personally, I'd never advise anyone to select stocks on their own. It's a very, very hard thing to do. I can maybe talk about the ideal number of mutual funds or funds, be it small case portfolios or mutual funds or ETFs. But I will definitely not advise anyone to go into stock selection on their own. I think that's what I have seen in my very, very few people are able to do it well. It's not worthwhile spending so much of time, energy. Uh, if you actually do intend to get into this as a full-time profession, only then I would advise anyone to do it. But otherwise, I would definitely not advise anyone to do it. Again, the ideal number of stocks, if you actually are asking, or the ideal number of funds, I think it depends a lot on the risk profile also. So personally, for me, uh, I am more of an aggressive investor, and that's why I like to put much higher allocation of my overall portfolio into equities and a good part into Gulaq Gear 6. But I think it's right time that people maybe who are getting concerned about the volatility should definitely check out either Gear 5 or Gear 4, because what it does is it's able to produce good returns, benchmark beating returns, but at much lower volatility. So I think I'll urge everyone who is a bit concerned about the volatility should check out our Gulaq Gear 4 and Gear 5 portfolios. Coming back to the question of number of stocks, it depends a lot on your risk profile, right? So if you are an aggressive customer, I know people, and I know one of my friend who has invested in Gulaq Gear 6, a very big chunk of his portfolio, and he's very, very aggressive. And I'll never, in fact, my advice to him was also not to invest so aggressively, but he actually did go and invest because he's very aggressive. And there are others who have invested, even though they believe in Gulaq Gear 6, which has about 12 stocks, but because they were not very comfortable with the volatility in equity in general, they have invested very small. Even though they were convinced that it's going to do well, they've invested a very small part. But depending on your risk profile, it could be as low as about, say, 10 to as high as maybe 30, 40. But a general rule of thumb or advice is not to get into equity selection on your own.
Right. Thanks, Vivek. So, Vivek, we do have few more questions, but just a time check. Do we have a hard stop today?
Yeah, maybe in another 10 to 15 minutes.
Sure, sure, Vivek. So, I'll quickly try to take questions that are a little new. Okay, so Rohit Chabra is asking, is any concentrated portfolio available in PMS?
So do give us a call. We'll be happy to speak to you. There's definitely not a concentrated portfolio, but a portfolio which is obviously which is doing very well than index. We have been able to beat the benchmark. All of that thing is there with very low volatility. So we'll be happy to speak to you. Do get in touch with us. over email or phone, and we'll be definitely happy to talk to you about that.
Right. One more person is saying, oh, the website is not working, gulaq.com website. So maybe we can check that, Vivek.
Sure. Yeah.
Internally. One thing, how much is the maximum limit to invest in Gear 6? So Shiv, like Vivek mentioned, as of now, there is no operational limit that we have set, but we usually recommend people to not invest more than 30% in any fund, whether it be Gulaq or some other fund, more than 30% because of the concentration risk involved. But if you ask operationally, there is no limit really.
Yeah.
Is 3-4 years considered long term for Gulaq 6, or even more is required in the context?
I think 3-4 years is the minimum time frame one should look at while investing in equities. Anything less than that is uh, you're taking a higher risk, I think, right? And as I've said earlier, the longer your time horizon is, you get a very big undue advantage as an investor. So personally, for me, it is about 10 years. And because it is 10 years, I usually I don't need to see my portfolio on a daily basis or really need to track news or anything else on daily basis. It's just once a month that I rebalance my portfolio, see my asset allocation is right, because I am able to think longer term. And that's why I really don't get worried about anything that is happening, frankly, in the markets, right? So the longer time duration you have, the more advantage you have. But at least 3 years is one should look at before investing in funds like Gulaq Gear 6, which is 100% into equity.
Right. Okay, I think Vivek, you've pulled out the screen so we
Yeah, I
can.
think maybe you can share this.
Yeah, definitely. So, guys, in the last two webinars, people have been constantly asking us if we have some discount for investors who want to try out. So, we are happy to share that we have this Diwali 23 discount code that you can use to get a 23% discount. We are in year 2023. So, 23% discount for the first 6 months of being a subscriber of Gear 6. The price of the plan is 2,900, which includes GST, and you get a 23 discount if you use the code Diwali23.
And this is only valid at st.smallcase.com.
Yeah, it's valid at se.smallcase.com, and the validity will be, Vivek, what is the validity? Is it 15th of November or is it?
No, full November.
Till November. Oh, okay, yeah. So it is valid for month of November. Please feel free to make use of the code. I hope a lot will be happy because last time when Sandeep had the webinar, tons of people asked a question that, do you have a discount?
Okay.
Do you have a discount? So this comes as the we should have marketed it that way. We should have told people that we have a surprise for people.
Yeah.
Anyway, okay. We have more questions. SK is asking that one of our stocks has a allocation of 0.5. So do we have any thoughts? He's saying, does it really matter in a portfolio? Because if we invest 1 lakh, only 500 gets attributed to it.
Yeah. See, what we have seen is in terms of returns, it really does not matter. In terms of reducing the risk or the volatility of the portfolio, it matters. So if I remove this, the volatility would increase, the returns really not so much. That's what we have seen, right? And it helps our portfolio diversify a bit more. That's what I would like to say. So it's better to have 14 stocks instead of 10 stocks in a portfolio. The returns are not going to be meaningfully different, but the risk, there is some difference in the volatility in the risk that we are taking. So it helps us a bit. Yeah.
So Kamal, interesting point. He's saying, can we do rebalance on the 25th of each month? SIP done on 25th every month gave more returns. Since everybody gets their salaries on the first each month, markets are generally few percentage points up. Vivek, what is your
Kamal, it'll be great if you can share. See, what we have seen is we have seen in Nifty at least. Yeah, Nifty is what we have taken as the benchmark and did this study that which specific day uh, is going to give you better returns.
Mm.
And I don't remember exactly the date, but I do remember the conclusion that it was not statistically different. So there
Mm.
might be one specific day, obviously, out of those 30, 31 days, which will give you higher, but it has to be statistically different from the others. And it was really not statistically different. It was just a random thing that came out in results. And that's why we are saying that it really does not matter. But if you have that study, or if you have done it yourself somewhere, you have seen it, we'll be happy to have a look at it. But our view is it really does not matter. You've
Mm.
seen that it really does not matter. But I'll be happy to look at uh, the study that you have seen and saying that maybe towards the end it will be better.
Right.
Yeah.
Yeah. And Kamal, you can reach out. We'll share the email ID also of support team. So if you reach out, if you send us an email there, they will pass it on to us and we'll be happy to get in touch with you if you've done that analysis. Okay. Transaction. Okay. That's a good point. So S. Hapson is saying he has an SIP with Gulaq. At the time of rebalance, I have to do rebalance first. Then in another transaction, SIP amount gets invested. So can these two be clubbed together? Sure. We will definitely check this with small case. This is an operational question. So let us definitely write this down and we'll check this with small case and we'll share it in the next webinar, which should happen in the coming 2 weeks only. But if you face this problem, you can reach out. I would suggest on Monday itself, reach out to the customer care executive of Gulaq so that he can loop in small case and get an answer to your question before the rebalance date itself.
But this is operational. Actually, we'll definitely raise it with small case, but they will need some time to actually implement it. If they feel it's a good, and definitely it's a good idea.
Yeah.
But let's see where it comes in their list of priorities.
Yeah, and I'm not sure if something like that, Vivek, already exists, if it's possible. I've never tried to do an SIP along or invest more along with my rebalance when I rebalance Gulaq. So maybe that's why, maybe it's already present, in the operational process. So if
could be.
If S. Hapson, you can reach out to us. We will know which specific user you are, and we'll be able to raise it to small case. Let's try to get an answer before the rebalance. What else? We have quite a few questions. Best time to rebalance at the start of trading day or in the noon when morning volatility gets settled.
See, I personally rebalance around maybe somewhere between 9:30 to 10:30. Not in the first 5-10 minutes because of the volatility, but I personally like to rebalance start of day. Yeah. We haven't seen best time, definitely best. What I can say is if you rebalance in first 2 or 3 days, after that, if you push your rebalance, it's going to affect your returns. But if you rebalance on the first 2 to 3 days, again, there's no difference in your returns. So definitely do try to rebalance as soon as possible, and definitely in first 2 days. That's what I would like to say.
Right. Harshad, how do other small cases of yearly subscriptions, Harshad? I think we discussed it last time that there are RAs, research analysts, also present on small case. So RAs are allowed to offer portfolios with a yearly plan, whereas RIAs, which is Gulaq, we are a SEBI registered investment advisor. We are not allowed to offer 6-month plans because we cannot charge money from our investors in advance for more than 6 months. So that's the reason why you see this difference. Then Ashish, whether the video recording will be available. Yeah, Ashish, the video recording of this will be available. You can come back to the same URL, to the same link, and you'll be able to see the entire webinar. Okay, the person who had asked about that pre-market question, Vivek says that he got it, but rebalancing during pre-market is able to get the lower price instead in morning instead of normal market rebalancing. So he's, I think, trying to rebalance in the pre-market, probably an AMO order, but I've never explored this myself. But
okay, even I haven't explored this, but we'll need to look into this. And so, does he have a specific question? But definitely, pre-market is something that we look at. But
Yeah.
Does he have a specific question or some problem with that?
No, no
No.
question
Okay.
really. That's about it. Uh, Ashish has a question if we can share the maximum amount he should invest in Gulaq in absolute terms and not percentage terms of his, not percentage of corpus, but in absolute terms. If we,
See, people have invested large amounts. I think I don't know anyone who has invested a crore, but definitely large amounts, tens of lakhs. Definitely, there are many people who have invested tens of lakhs. That's what I can say. The market is big. Our portfolios are definitely not uh, over. There's definitely, in terms of capacity, there's huge capacity right now. So I don't think there is any meaningful limit for retail investors. As I've said, there are many investors who have invested tens of lakhs, maybe 50, 60, or slightly higher also. So yeah,
so Vivek, will it be better if someone has more than 50 lakhs to think about PMS because that has lower concentration risk?
that's what we suggest from our side. That is more diversified. The returns are pretty solid in that, and the diversification or the volatility is much lower as compared to Gulaq Gear 6. So that's what we suggest that, and that has a track record of more than 5 years. So we do have a pretty solid PMS. Again, the methodology, the portfolio construction approach, it's exactly the same. So do reach out to us if you think that is something that you would like to consider.
Definitely. Someone is asking, does investment in PMS also involve mutual funds?
No, PMS is again same methodology. We select a list of stocks and invest and rebalance it every month. So again, similar methodology, but the number of stocks is larger and the minimum investment size is 50 lakhs. Yeah, but the structure remains the same. Obviously, you don't need to rebalance it yourself. Uh, we as a firm will take care of the rebalancing. So that is something that you don't need to do yourself, like in case of small case.
Yeah, so that I think answers. Amol is asking if he can automate rebalancing. So Amol, unfortunately, small case does not let you because as an investment advisor, we cannot take action on your behalf. We can only give you the advice, but the final go ahead to make that trade will be has to
Yeah.
be in your hands. So you have to really go about doing doing the rebalancing. But in case of PMS, of course, PMS is a different product structure, different product construct, wherein you deposit the money with the PMS provider. ST also does that. So, and then we'll be able to, like Vivek mentioned, rebalance on your behalf monthly. Anand is asking that his Gear 6 subscription ends in Jan 2024 on Wealth Desk. Should I have to exit my positions to subscribe? So, Anand, I would request you to please drop in an email to our support ID. If your subscription is ending, we will anyway be sending you an email 1 month prior to when your subscription ends with a list of steps that you need to follow to move to small case. We usually advise that you should actually exit your position and subscribe on small case on the day of the rebalance. So let's say if your subscription ends in Jan 2024 and 1st of Jan you want to do your rebalance, so you should already subscribe to small case on, let's say, the 31st of December, a few days before that, so that that process is already sorted. On the 1st of January, what you can do is you can sell your portfolio from Wealth Desk and buy afresh, like invest afresh on small case. Sell from Wealth Desk, buy on small case. That really takes into account the movement. But if you need more clarity, please drop in an email and our support person will get in touch with you. Okay, last few questions, Vivek. Utpal Mishra, any PSU stocks in Gear 6?
Sorry?
Any fear of PSU stocks? Sector specific questions.
Yeah, I think it's a sector specific question. I would not like to get into sector specific views. We really do not have any sector specific or stock specific views that you'd like to share.
So Swayam has asked a question, Vivek. What percentage of money has Vivek invested in Gear 6 or Gear 5? I think you've been very open about sharing it previously also.
Yeah, it's a good part of my equity investments that I personally have done. I think of my equity part, I think about 30, one third of that, close to one third of that, I've
Right.
invested in Gulaq Gear 6. Yeah, I think, see, my investments are at different places, but roughly around maybe 30% or so is
Mm.
what I have invested in Gulaq Gear 6.
Yeah.
Some are in mutual funds, some are in index funds. Yeah.
Right. And so, like we mentioned, most of our team has invested. So I myself have invested almost 25% of my net worth in Gulaq. So I think we do follow what we are
So not
suggesting.
most, but all.
Sorry?
Everyone in Gulaq. You said most of
All.
our team,
Yeah.
but it's actually everyone.
One has done. Yeah. Okay, Ashish. A word of appreciation for the gentleman who answers your helpline number. He's extremely polite and patient. Thank you so much, Ashish. We'll definitely. So Toran Sharma is our person who helps answer all clients' queries, and definitely we will let him know about these words of appreciation. Thank you so much. Okay. Okay, last question by Mayank. I have a 6-month subscription running at the moment. If I subscribe again with the above code, will my subscription get extended from the last date when my original subscription ends? With the above code, and the code we shared, the discount code, we will have to check, Mayank. I'm not very sure about how this works because the code is only for new investors. So I'm not sure how this will work. We will have to check that and have to get back to you. So you can again raise it to us. Swayam says that brings the confidence in your subscribers. Thank you so much, everybody. I think, Vivek, that's about it. We are exactly at the 6:50 mark when we wanted to end. And it's been great. So many people have joined in, so many questions, even on a Friday night. That is very heartening for us as well. Vivek, any parting words from your side?
Nothing. I just realized I keep repeating what I say. Think long term, invest long term. So nothing from my side. Thanks a lot for everyone to attend this. We're getting quite a few queries. Toran informed us. Lot many customers are concerned about the market volatility, and we thought it'll be good to speak to everyone just to clarify whatever doubts they are having related to markets or good luck. So it's good to interact with everyone.
Yeah, perfect. Thank you so much, Vivek.